at the settle. The settle is down at the 74.84 level. Overnight inventory is 100% long. The odds are about 75% that there will be a counter auction or a correction to overnight inventory. If there is not a correction to overnight inventory, and particularly when overnight inventory is long, that would be an indication of at least short-term strength in the market. Remember, the odds are 75% that you'll get a counter auction would mean that we would sell off early on, which is nothing more than a correction to overnight inventory. Now, the next thing, and what I'm always talking about, is awareness. So when you look, you take a look, and the market is down at the bottom of a multi-day trading range. If you'll see that the overnight low is exactly at the low from, I don't know if it's 716 or 717. That is not a high confidence. That is not a high confidence low because of its exactness. Now, if you look over and look onto the left at 7.8, look all the way to the far left, 7.8, there's a non-excess low down there. That's the absolute low of what I see as the current trading range. And you may differ, but that's what I'm seeing. So right now, as we come in about 15 minutes to the opening, the market is set to open. And if it opened right now, it would be right in the center of yesterday's range. When you open in the center of yesterday's range, the best thing to do is just sit back, relax, let the market settle. Because there's no real opportunity here unless you open and you drive one direction or the other. The odds are you get a counter auction or a correction to overnight inventory. You were in the center of yesterday's range. More than likely, the best thing you do is just sit back, relax, and let the market unfold. And a lot of people, most short-term traders, err because they overtrade. They get too anxious. They want to trade. They overtrade, and that's costly. You've got the commission. You lose the spread between the bid and the offer, and that adds up to a lot of dollars over a long period of time. So what I see this morning is just sit back, and guess what? If you miss a trade, you miss a trade. Sit back, let the market settle. There's no real change. You're in the middle of yesterday's range. Overnight inventory is long. Just relax, let the market settle down. I'll take any questions.
All right. Anybody have any questions for Jim? I'm just having a hard time this morning with the market profile, but I mean, last 2 days, I will ask, but last 2 days was so hard for me. Is it just because there's no volume in the summertime? Is it why it's so difficult to read the market?
Well, the market, remember, if you take a look at a bar chart, you're right down at the lower end of a multi-day trading range. So that's going to be very difficult because there's a lot of indecision going on. Yesterday morning, the market got really excited and went up to fill the gap. Short-term traders took it up to fill the gap. Once they filled the gap, there was nothing. I mean, that was all it was. Short-term traders were eyeing that gap. They could see it. They go to visual trading references. Once they filled the gap, that was it. In the afternoon, the market took down, and for a while there was exactly at 75. Again, a very, very mechanical reference. It rallied from there, which was all short-term trading, and then it came back down and took out that 75 because that was a very mechanical reference. It was a double print down there. There was no excess at the 75. Then you got some short covering, and the market came back down and took it out. Following the close, you went back down and you have an exact print on the low. So overnight inventory is long. I don't see anything to do in here. As a short-term trader, if you have no position on, I would sit down there and just take a deep breath, let the market settle, because like I say, most traders overtrade. Okay, other questions?
I have a Bernie says, Jim, I love your weekend videos on YouTube. Very informative.
Thank you.
KJ says, looks like NQ is above yesterday's range. Does the same hold true? And how much pull will the ES have on the NQ?
Okay, one of the things I caution against is trading one market off of another market. That will usually lead to cognitive dissonance. I don't trade the NQ anymore. And the reason I don't trade the NQ is it's too thin. It's too thin. They're different players. I personally do better with the ES. And I don't look, I used to, but I don't look at any other market other than the ES. You start looking at the other market to trade the ES, or you look at the ES to trade the NQ, the chances are it's going to give you cognitive dissonance. And that is a real killer. If for example, the NQ being above the ES has an impact on the market this morning, you're not the first to know that. Longer term, smarter traders will already have taken that into account. So if you then look at the NQ and let that impact how you're going to do the ES, or you look at ES, how that's going to impact how you trade the NQ, remember, every trader in the world can see that. So you would more than likely be double counting that information. When you're double counting that information, you put yourself at a disadvantage.
Ouch. Okay, that hurts me. I know I'm fully guilty of that. So
Well, it used to be. I remember a long time ago, everybody got crazy because they're looking at crude oil in order to trade, to trade equities.
Right.
And and all of a sudden, one day that worked for a while, and all of a sudden it was totally gone, and people are still looking at that. And it really, we have a tendency to look at too much information, rather than just look at the market you're trading, because everybody else knows what's going on in that market. Mm-hmm. Like I say, the other thing I will say, and this is important, think about when you talk about there's a weak high or a weak low. How did that weak high or weak low develop? It developed because, let's say it's a weak high. It developed because there was weak selling there. So a lot of times it's not uncommon when you have those weak highs and lows for them to be taken out. What happens, let's say, for example, the market comes down and it trades exactly like yesterday afternoon, it traded exactly at 75. And it pushed and pushed and pushed. Short-term traders were buying exactly at 75. Well, did you get a move on that for a while? Yes, you did. Yes, you did. A short-term trader said, oh, wow, I made some money. Well, then the market came back and took that out. Now, what I did with that information, when you had that double 75 low, when the market rallied, I used that to short the market. Because that low was a weak low because it was, it was made by short-term traders. So again, you can use those references as short-term traders, but understand they're not, the odds of them being lasting are poor. And when I trade, I like to think in terms of odds rather than absolutes in the market. Odds rather than absolutes. There are no absolutes. There's too much irregularity and randomness that takes place in the market. Okay. Anything else?
Yeah, thank you for that. Claudio says, thanks for sharing your read on the market. Do you think the market today will be in balance, waiting for tech earnings tonight?
I don't do those things. I mean, all I do is look at the market.
Mm-hmm.
When I start thinking, waiting for tech earnings time, sure. Do I know that, that can have an impact on the market? Of course I do. But I don't use that. When I look at today's market, I'm sitting there saying, okay, just read what the market is doing today. For example, what I say right now, if we open right now, we would open almost centered within yesterday's range, right?
Correct.
Okay. So what's the opportunity? There is no opportunity. Sit back. Overnight inventory is long. The odds are about 75% you get a counter auction to overnight inventory. Okay. If you don't get a counter auction, there's probably some strength in the market. If the market doesn't do what you expect it to do or what it normally does, there's a reason for that. Okay.
Okay. Thank
So
you.
the market opens in 3 minutes, right?
Yes.
Okay. So let's stay for the opening. Let's see if that's okay with you.
Definitely.
Let's just see what happens. Remember, overnight inventory is long.
Mm-hmm.
The odds favor a counter auction. If you don't get what you expect, then there's probably some short-term strength in the market. But the odds, I'm always thinking about in terms of odds. When you open almost in the center of yesterday's range, guess what? The market's in short-term balance. And when you're in short-term balance, so many times, unless you get single prints right off the open that are really strong, you're just better off to sit back, relax, let the market develop.
Okay. One more question.
Sure.
I think you already answered it though. Yeah, Mark, he says, to me, the market profile references and the MGI market generated information are working against one another. Am I misleading the context?
I'm sorry, what was that again?
He says the market profile references and the market generated information are working against one another. Am I misleading the context?
I'm sorry,
Yeah. I
don't
think
understand. All the market profile is, it's a distribution curve. Distribution curves of what scientists and mathematicians have done for years in order to organize data. All it does, it organizes data. It doesn't tell you to buy. It doesn't tell you to sell. It's just organize the data. Once the data is organized, it's easier to interpret what is going on. Now, the shape of the profile is also relevant. There is, in a distribution curve, the structure is also informational. For example, sometimes you'll get a P shape, that's short covering. Sometimes you get a B shape, long liquidation. That's information from there. But right now, all the profile is telling us that overnight inventory is long. The market is just slightly above the center of yesterday's range. There's no real news till later today. So when I look at this, I say the risk of being long is high. Doesn't mean it's not going up, but I'll just, when I have a market that opens within yesterday's range, I just sit back and let the market set up. And I don't see how it's working against each other. It's simply information. It's simply information, and the information is, we've got overnight inventory is long.
And here we go. Wow, your market profile resets really quick.
Okay, so you're continuing up. You haven't had a counter auction. You're right at the overnight high. You're still within yesterday's range. Overnight inventory is still long. Now, the way I use volume, well, my profile is on the left of the profile is the 30-minute volume. On the far left is cumulative. Right now, they're going to be the same. Okay, so white volume is light, pink is medium, red is heavy. So when I look at this, the market is trading off. The volume is relatively low because it's white. Now it's coming right back down to half back from yesterday. Half back from yesterday is a very mechanical reference that short-term traders use. Okay, so overnight inventory was long. We are getting a slight counter auction to overnight inventory. Now you're down to yesterday's half back, which was the reference that they were using overnight. Remember, volume is relatively light. So what didn't happen, the market didn't open and go straight up. You are getting a little counter auction. You're still within yesterday's range. The low is weak because it's exactly at half back from yesterday. Bigger, longer term traders don't buy and sell at exact references. I ran an institutional desk. It was many years ago because I'm 86 now, but I ran an institutional desk for years ago, and that's not how big money buys or sells. When you see that exactness, that's usually very short-term, weak hands traders. Okay, so it's a weak low because exactly, and there's traders, some traders are using it to buy exactly at half back from yesterday. That's the amount of research they've done. It doesn't mean it won't work, but you got to understand that it's a low quality reference. So you see, this is what short-term trade, they're buying it right there. So far, we are within, the range of the last couple of days. We're within the center of yesterday's range. Notice the high is also questionable because it's exactly at the overnight high. Again, a very mechanical reference. Okay, so you are getting some counter auction to overnight inventory, not setting the world on fire. Now, the next lower reference they use would be half back from overnight. Again, because it's very easy to see, very mechanical.
So the tempo seems pretty slow for a morning opening session.
But it's within yesterday's range, so there's no real change.
Mm.
There's no real change in the market. You're within yesterday's range. You're within the last 2-day range. Guess what? The market's asleep. It's summer. So many times people try and force what they want to have happen. Just relax, let it go. Now see that they're buying it again right around half back. You can see what short-term traders, that's what they're looking at their reference. So like I say, when I see a day like this, I'm not anxious to trade. I'll just sit back and I'll just let the market do its thing. I don't like the high because it's exactly at the overnight. Okay. I don't like the low because it's just right at right around the half back from yesterday. So I see low confidence in both directions. Overnight inventory is still long. You have I do look when you have a double distribution from overnight. I don't usually pay much attention other than I do look at double distributions. So if there's any real give back, you'll go back and you'll fill that double distribution from overnight. Okay, very low confidence day, low confidence on the high, low confidence on the low. I just sit back there and say, ho hum, don't get caught up, don't overtrade, don't outthink the market. Jenny, let me say thank you very much. I hope that was helpful.
Thank you so much, Jim.
All right. Thank you,
All
guys.
right. Thank you.
All right. Bye now.